Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about Ripple and XRP, as well as the vast majority of crypto and finance. And with that being said, I hope that you are all having a beautiful day or a beautiful night wherever you guys are out there in the world. One of the biggest things that we have been anticipating for years, I mean, we're going all the way back, I think it's like maybe now 8 years or so. I mean, it's been a while, right? Is Basel 3. Guys, this is the death sentence for major banks. I've talked about it in the past. When we are addressing this falsified world of banking reporting on reserves and things like that, this is going to change everything. And I do think that this is one of the major pillars that need to be put in place in order for the new financial system, backed heavily by crypto and DLT technology, to be realized in. And all of this is a significant step on the path to that system. Now, as we look into this, this is the EU, right? This is the European Central Bank. Basel III finalization in the EU, the key elements and how they make the EU banking system more resilient. Now, there's a lot going on here. There's a ton of information that you can read over. For the most part, right, the big thing that we need to look at is the latest changes to the framework as set out in Basel III seek to address the gaps and shortcomings in the previous framework, which were exposed in the global financial crisis of 2007 to 2009. The aim of Basel III is to create a more resilient banking system, and the EU, including the ECB, has contributed actively to its development. Currently, many jurisdictions are in the process of implementing the final elements of Basel III, so we are getting very, very close. Now, Basel III has technically been phased in over a number of years, as they do say. While many parts of the framework have already been implemented and are applicable today, some key elements are yet to be put in place. The final elements here are actually focused on risk-weighted assets, not to be confused with real-world assets. The Basel III framework requires banks to meet risk-based capital ratios, and the final elements of Basel III focus largely on the definition of banks' risk-weighted assets. Now, as we look into a lot of this is going to put so much pressure on the banks. I've talked about this in the past. There's going to be a lot of problems that arise from this and could ultimately usher in the new system. I've talked about how they could essentially collapse the banks because right now, I'm going to be honest with you guys. I don't think that banks are as strong as they're telling us. I've talked about this back in 2023, in the middle of 2023, and I will talk about it again. I don't think that we actually bounced back from 2023, and I also don't think that we've bounced back since 2007 to 2009. I think that we've been living in this fairy tale land of propping up the system and making things look like it's all good while printing massive amounts of money to bloat the system and essentially say, hey, look at everything's all good. You guys can keep spending your money, keep, getting hit with taxes and all this stuff, kind of keeping the show going on, if you will. So I don't think that the banking system is as resilient as they are trying to make it out to be. And I do think that that's where we really kind of see Basel III and the pressure that it will put on banks being highlighted. And I think that this is also why a lot of bankers are very concerned with Basel III. We have over here today's subcommittee hearing shows both Republicans and Democrats having serious concerns with the impacts of the Basel III endgame proposal on consumers, communities, and small businesses and financial institutions of all sizes. And this was January 31st. Now, a lot of these big players like Brad Sherman, for an example, are pro-bankers. They love the banking system. We actually have a quote here. Poorly tailored regulations are bad. They reduce economic growth without reducing the bailout risk. And I just want to say, where the hell has been the economic growth in the last 10, 20, 30 years? When we really look at the overall economy, the big thing that we've been focused on is debt, massive amounts of printing. I mean, hell, it's been rough. But we also have down here, I'm not the only one on this committee very frustrated with what's going on. And then also down here we have Sean Casten voiced concerns with the current proposal's impact on renewable energy financing. The major thing that I've been really kind of looking at, right, is also this one. Remember, this is from December. Remember this one? This is JPM CEO, JP Morgan. Jamie Dimon criticizes Basel III endgame. He calls it harmful, despite zero evidence that U.S. banks are undercapitalized today. The proposed Basel III endgame rule, 10 years in the making, shockingly, if enacted, would increase capital requirements by about 25% for the largest banks. The rule would have predictable and harmful outcomes to the economy, markets, businesses of all sizes, and American households. And the big thing here, right, is the bankers, they're terrified because guess what? They've been running a falsified Ponzi scheme, if you will. I always called these big bankers and the fractional reserve banking system, it's a glorified Ponzi scheme. That's really all it is. But listen closely to what Jamie Dimon is saying.
Despite zero evidence that U.S. banks are undercapitalized today, the proposed Basel III endgame rule, 10 years in the making, shockingly, if enacted, would increase capital requirements by about 25% for the largest banks. None of these proposed changes, by the way, would have effectively prevented the Silicon Valley bank failure. The rule would have predictable and harmful outcomes to the economy, markets, business of all sizes, and American households in ways the Federal Reserve has not studied, contemplated, or shared. Mortgages and small business loans would be more expensive and harder to access, particularly for low to moderate income borrowers, as costs for originating and securitizing loans rise. Savings for retirement or college will yield lower returns as costs rise for asset managers, money market funds, and pension funds. Government infrastructure projects will become more expensive as capital requirements for market activities will more than double, translating to higher costs to build hospitals, bridges, and roads. From beverage companies that need to manage aluminum costs to farms that need to protect against environmental risks, if the cost of hedging these risks increases, everything from a can of soda to meat products will be impacted. Ironically, a proposal meant to mitigate risk will actually increase risk. This rule will result in an increased shift away from regulated markets to less regulated markets, which was not also studied, by the way, and this activity will be out of the sight of regulators unable to see the next crisis brewing. I fear that the proposed now, study later is becoming a troublesome new theme in Washington. There have been a number of consumer-focused products, caps and late fees or interest rates, cuts to debit interchange, to name a few, where virtually no economic analysis has been performed to determine the individual or collective impact of these rules in consumers, small businesses, lower-income families, markets, or the economy. The debate should not always be about more or less regulation, about the right regulations to keep America's banking system the best in the world. I urge lawmakers and regulators to be thoughtful about the effect of arbitrary and unstudied regulatory proposals and their cumulative impact on the economy. Good regulations and good regulators are critical to maintain the strength of our banking system. Our nation should give thanks to Chairman Powell and Secretary Yellen for their tremendous work through some complicated economic times, including their work on sanctions following Russia's invasion of Ukraine and the steps they took during the regional bank turmoil this spring. These are excellent examples of how regulators working with the industry, collaboratively, sharing information transparently, can protect the financial system and the country.
So there you guys have it. And again, you could just hear the panic in the bankers' voices, right? This is Jamie Dimon. Bank of America was also really kind of talking about this as well. Citi, they've been extremely vocal on how they are against it. Now, the main thing that I want to focus on with this is why they are terrified of this. Remember, this is going to collapse the charade that the bankers have been putting up for a very long time. If we go over here, the Federal Reserve should remove gold plating in the Basel III endgame. Now, mind you, I told you guys with Basel III, I also think that gold and silver are going to be extremely valuable. We will get to that here in a second. But within this last one is very interesting up until like about this point. So excessive capital requirements would, one, constrain banks' capacity to provide credit and support the capital markets and the broader economy. 2, accelerate the shift of financing activities outside of the banking system. And 3, further diminish liquidity in key markets and exacerbate financial stability risk. What I find very interesting about all of this, right, is that we are at this like no turn back point in time around adopting new digital forms of currencies. ushering in the digital financial system. And they need something. They need some type of major event that really kind of accelerates the push, because guess what? The solution is already there. They just need some type of event to say, hey, look it, we need a solution to this. Would another 2007 to 2009 type of event, which is a black swan event, be that thing? Because if that's the case, this could very well be the end game scenario right before we have that new system. Mind you, this is fully focused on liquidity and, providing credit and things like that. Think about how much credit and liquidity is tied up right now. Think about how much is locked away that needs to be unlocked, and what could do that. Talked about it in the past. But also, if we go back in time, here's January of 2018. This is from the BIS, a level playing field in banking. Very interesting. And this is all around Basel III. This is around major events happening around Basel III and what they were planning on back then. I find this very interesting, because at the same exact time that we were witnessing this in 2018, we started to see some pretty large POCs happening, specifically even around Ripple. Again, that's not me saying, hey, Ripple's 100% tied to this, but I'm just saying that it's very interesting. Banks were already starting to tap into blockchain and DLT. But also look at what we are seeing here. The agreed regulatory framework readdresses the key shortcomings exposed by the GFC, such as insufficient bank capital, too much leverage, insufficient liquidity buffers, and overstretched maturity transformation. What's more, it employs multiple regulatory metrics with complementary constraints backstopping each other and providing protections against undue variation in risk weights across banks. So this is what they've been focused on for a bit of time. Again, I think that this is just one step in the overall view of what they are trying to do. But also here we have, this is precisely implementation and supervision. Standards are one thing, implementation is another. Safeguarding Basel III's level playing field requires consistent and timely implementation. National authorities need to translate the new standards into legal requirements in their own jurisdictions. This has not always happened in the past in terms of both timing and substance. Now, mind you, do I think that this is, in context, is the same exact thing that we've been hearing for a while around Ripple, where we actually have this idea of level playing field? Because in my opinion, the term level playing field has been thrown around for a while, and Ripple was one that was really kind of key in this term initially in like 2015, 2016. So I find that very interesting. But also we have over here from Morgan Stanley, and this is where impact on the money markets Basel III really kind of comes up. And this is 2018. This is liquidity, global liquidity team. And we have the overall view of what Basel III really is, but we also have down here, level playing field for regulation. Basel III measures aim to improve the banking sector's ability to absorb shocks arising from financial or economic stress, improve risk management and governance, strengthen banks' transparency and disclosures. Again, this is the big one why banks are very terrified about this, but they need proper liquidity. How are they going to get proper liquidity, right? Because the main focus of this is capital reform, risk management and supervision, and market discipline, liquidity coverage ratio, and net stable funding ratio. Now, I'm not saying that Ripple and XRP are going to be at the forefront of this and banks are going to start tapping into XRP and holding XRP, but I do think that as we have been, really kind of in this space for a while and doing the research, it would make sense that Ripple does play a role here at some point in time to offer liquidity for banks. Do I think that it's a little bit too early on for that? Not necessarily, right? Because remember, Ripple has been around for well over a decade. They've been, hinting at liquidity solutions for a while for banks. And also remember the AMM, which is going to unlock tons of liquidity and provide liquidity pools on the XRP ledger. It all kind of fits together. Again, no confirmation of that. It's more speculation. But over here, we have Basel III implementation. The last mile is always the hardest. This was May of 2021. Again, level playing field comes up multiple times here. The standard setting drive came later as it became clear that supervisor cooperation, which sought to avoid disruptive crises of international banking groups, and standard setting, which aimed to foster an international level playing field, were closely connected. Interesting. Now, the US and Europe are not yet live with Basel III or anything like that. That's why I say like this is still in progress, but it has been a work in progress for well over 10 years now. And it's kind of crazy that not enough people are really looking at this the same way that they should, because Basel III is going to put a tremendous amount of pressure on the current financial system. And how are they going to alleviate that pressure? Again, I could think of a few ways, but I'll let you guys speculate a little bit more on that. But I also found the terminology here a little bit more interesting. The last mile is always the hardest because when we go back in time, we have the last mile playbook to global payments. This was Ripple. Speed, transparency, and liquidity are critical for efficient payment processing and cross-border transactions. Now, do I think that this is just a coincidence in terms of terminology? It definitely could be. But I do still believe that Ripple is tied to a lot of these moves being made right now around our current financial system. Again, I already know that Ripple is working with the BIS, for an example. Ripple has met with the ECB on multiple occasions. And also Ripple has major ties to large organizations like the IMF, the World Bank, the World Economic Forum, etc. Now, last but not least, I do also want to provide 3 clips that got posted by ISO22 Let's Do It, and this is all regarding Basel III Endgame and gold revaluation. Bank call on Fed to rewrite rules. Check this out, and this is from ITM Trading. Incredible platform, an incredible channel on YouTube as well. Check it out if you guys haven't already, but listen closely.
Big U.S. banks call on the Fed to rewrite those contentious bank capital rules where they would have to hold more in reserve. How awful of us. Seriously. Okay, banks on Tuesday will urge the U.S. Federal Reserve to completely overhaul a draft rule hiking bank capital in the last leg of Wall Street's effort to water down the Basel Endgame proposal. See, Basel III, that's been evolving over these many years. They always like distance so that you do not understand that their policy over here is having this impact over here. This system is so fragile that holding your wealth in there is so dangerous. Comments on the Basel rule and 2 other big bank capital and long-term debt draft rules that aim to boost banking system safety and soundness are coming out. The U.S. proposal could make it more expensive for banks to transfer credit risk via securitization. Do you get this? This is all about risk transfer. I've been talking about it forever because that's what this whole system is about, is transferring the risk from the few that get all the benefits and all the gains to the many, to the public, to the masses. That's what Wall Street is all about, making private the gains and public the losses. I love the fact when they actually flippin' admit it. U.S. proposal could make it more expensive for banks to transfer credit risk via securitization. In addition, banks could be incentivized to shift out of senior tranches in exchange for more junior and riskier tranches, a perverse incentive that counters the principle and practice of sound risk management. So let's look at the Basel III Endgame a little bit. How that could impair securitization markets and harm U.S. businesses and consumers.
Now, on the second slide here, there's 2 more clips, but she's addressing also the level playing field approach because, again, it is something crucial to mention when we are talking about these significant changes happening. I always mention this because the big banks, they're terrified of this because it means that we are going to see significant change happening here. But they also have to make sure that the reserves are back. They need to make sure that they have reserves and capital backing those reserves. For the first time in history, which is going to put a lot of pressure on those banks. And this could cause turmoil. It could cause the next Black Swan event, for an example.
Harm
But here you guys have the second clip.
U.S. businesses and consumers, because really, they do all of this risky garbage and they transfer the risk to you. And then they say, well, but it's all about the children. It's always about the children after they've done all the damage. It's always about the consumer after they've done the damage. And they're counting on the consumer to support the stock market, these securitized markets, all of these markets, the private equity market. I mean, can the consumer do it? I don't think so. But this will result in more capital, higher cost for banks to finance these securitized assets, increasing interest rates and reducing the availability of credit. So disenabling the consumer to take on more debt. Booty, hooty, Rudy, Manooty. That's a horrible thing. But that is how money is created in this system. And as you just saw, the answer to every crisis is simply more and more debt until you get to a point where it doesn't matter anymore. And we are at that point. So increasing interest rates and reducing the availability of credit, thereby harming Main Street, as well as U.S. financial markets' global competitiveness, except we're all in the same boat. It doesn't really matter. So just who does invest in these securitized products? I thought it would be helpful for you to see that list. Mutual funds, pension funds, insurance companies, got any annuities? Banks, hedge funds, corporate treasuries, sovereign wealth funds, and other foreign governmental entities. So why don't you tell me, in all of that mishigas that you see there, who's the most important?
And then also on the last slide.
Because it's not you. You're participating through your mutual funds, your pension funds, your insurance companies, your banks. But all of these others just put you at more risk. They just transfer the risk from the few to the many. Do you think that they know that a collapse is imminent? I do believe they do. And so there's been talk for a while about the central bank gold purchases indicate revaluation plans. New monetary paradigm. Will the U.S. join it? I believe the U.S. will indeed join it. But central banks recognizing the revaluation potential of gold. So central banks have what's called a revaluation account where gold is revalued on a regular basis based upon their initial cost and the current inflated value of it. But this is the tool that they will use to do that overnight revaluation, where they take this garbage that has absolutely no value. Yes, you can still buy stuff with it right now.
And again, this is where we do start to see significant changes around gold and silver. I've been talking about this, right? That's why we have these central bankers accumulating so much damn gold at a time where almost everyone is distracted and they're still looking at their dollars and saying, I have to put it under my mattress. I have to keep it locked up. I have to make sure that I have a ton of cash on hand. When we should really be looking at, what are the central bankers accumulating? What are these big players accumulating? They're accumulating massive amounts of gold. They're tapping in to DLT and blockchain-based services. They're looking at the next generation of money. They're not looking back and saying, hey, we need more fiat currency, because guess what? They just print it out of thin air. So when we really look at what's going on, I personally believe that they're preparing for a significant collapse. I also believe that the Federal Reserve itself is trying to collapse the banking system, and they will succeed in that with Basel III, in my opinion, because again, it's going to put a lot of pressure on the banks. But the banks, like usual, even going back to 2007 to 2009, will reap the rewards. The big banks will get even richer, while the smaller tier banks, they get swallowed up, just like typical. And also remember, right, at the end of the day, money in itself is changing significantly. The elites already told you about this. They need the plan of action to play along with it, because guess what? They need the problem. They already have the solution. All they need is the reaction, and they're waiting to really push the envelope and push the problem, and the problem is going to be the collapse, because they already know that the collapse is imminent. It might happen next year, it might happen in the next 2 years, but we know that it is on its way. And the best way to prepare for something like this is to make sure that you have hard assets like gold and silver, and you are diversified. But also you need to make sure that you were prepared for the collapse, meaning you are either stockpiling some food, some water, things like that, some, things that actually matter. I see a lot of people right now still spending openly and going out to eat and, buying new cars and new flashy things, when we really shouldn't be doing things like that in unprecedented times. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And also, if you guys do want to go check out NordVPN, they are offering the channel and all the viewers of the channel up to 72% off the ultimate tier with 4 free months on all 3 tiers. You can save right now 64 to 72% utilizing my link. This is not sponsored or anything like that. This is strictly an affiliate deal. I do get paid from anyone that does purchase through my link, but guys, it is 64 to 72% off. It is the best deal possible, and they are offering it exclusively for the channel. So if you guys do want to go check it out, you guys are more than welcome to. Links down in the description below, as well as in the comments below. And with that being said, guys, this has been Nick. Thanks for watching. Peace out.